Good morning, everyone, and welcome to the next in the Tutors Association Summer Series with Edgemont Financial Services. We're really pleased today to have Andrew Pinto and his colleagues on the call with us to go through some of the business risk and assurance options that there are out there available for people that run their own businesses. So obviously, almost all people that operate as tutors or tuition businesses tend to be running their own business, and therefore they're exposed to some risks which they wouldn't necessarily have exposure to if they were an employee in a large company or whatever, and that company was going to give them things they wouldn't otherwise get as a self-employed or as someone that's created their own business for themselves. So without much further ado, I'm going to pass over to Andrew, who's way more competent and capable than I am in terms of addressing this topic and subject. And thanks very much, Andrew, for taking the time this morning, and to your colleagues also. I'll pass straight over to you.
Thanks very much, John. Really appreciate it, and appreciate the opportunity you've given us here. So good morning, everyone. We came on board with the Tutors Association a couple of months back, and really to be a sounding board and to give advice on business protection to you as members of the association. Edgemont is essentially a protection brokerage covering you and your business and the financial risks that you are faced with if you have an unexpected death or incapacity occurs. I'm supported this morning by our team who are also here today, being Jessica, Valerie, and Caitlin, all playing key roles in ensuring that we as a company can offer you the level of service that you expect and deserve. We are not a jack of all trades. We are quite specifically focused on what happens to your family and to your business if you had to pass away or become incapacitated in any way. Sorry, no, I should correct that, not in any way, in a medical way. Not a subject that we like to face and ask questions about, but certainly one that we have to address. There we go. I thought my slides were starting to play up. During today's webinar, I'm not necessarily going to read through the slides. I'm going to leave you to do that. I'm going to talk generally about business protection and what we do from a financial risk analysis point of view. And I'll leave you to read through the slides. As an entrepreneur and a business owner, you are faced with many different challenges on a day-to-day basis. And your primary concern is to generate income for your business, as it is with any business, to make sure that you can keep the doors open. You're faced with many different challenges, things like how many staff do I need? Where should the offices be located? What does the office space look like? What tools do I need to provide the business to ensure that I can generate that income we spoke about? How much capital have you got to finance the business? Do I need bank finance? If I do need bank finance, do I want to take that risk that comes with it? Sorry, guys. I'm jumping ahead here. So basically, tough questions are, what happens to your business if you die tomorrow? Tough question to ask, but it's one that is often overlooked by business owners. And we naturally think on the positive side because you never think about you passing away. I was actually on a train to London a few weeks back and flipping through emails. One headline caught my eye. And basically it read, you need to think about getting divorced before you get married. And I sort of double backed, and I thought my immediate reaction was, don't be ridiculous. Who does that? But the article caught my attention. I went into the article and I read through the detail. And the more I read, the more it actually resonated with me. And I sort of thought about it thinking, you know what, it's exactly what we do in our business. And essentially what everybody needs to do is you need to think about dying before you die. And you need to plan accordingly. And I think that's where a lot of people do fall down, where they actually don't plan sufficiently, especially for you as business owners. But again, that's weird. And the reality of dying does require some planning. And that's what this article was all about. So ask yourself the question, what if I died today? What does my spouse or partner do? And I'm talking financially here, obviously. Obviously, they're going to mourn your death, but I'm talking financially. What happens to my business? And I have had answers from clients that I've spoken to, or potential new clients that I've spoken to, where they say, I don't care, I'll be dead. It's not obviously not the ideal answer, but when you think about that logically, it does require some planning. How does my family get paid out the true value of the business of mine? How do I make sure that the bank don't come knocking to protect the loan that they've provided? That could be an overdraft or a mortgage, etc. How do my business partners find the cash to buy my shareholding out? Do I leave my spouse or partner at the mercy of my business partners to ensure a fair settlement of my shareholding or their income going forward? That's my main objective with today's session, I think, is to just raise that awareness. And we'll have plenty of time at the end of this for any questions that you may have. I do have a couple of frequently answered questions as well that I've chucked into. So please feel free to comment in the chat as well if you want to. And then we can deal with the questions accordingly. Understanding the financial risk that you as a business owner face, I think, is one of the important things you need to do. And financial risks are any cash flow risks that your business would face if you, as the head of that business, or any of your key staff members were not here tomorrow. And I'm looking at the following. What is my commitment to the staff in the business? Is there enough cash flow in the business to make sure that the staff can continue to receive salaries during this unsettled period? And you, as a shareholder or business owner, do you have an obligation? You do have an obligation, sorry. You do have an obligation to your staff to address this. Is there enough cash flow in the business to take care of their financial commitments and that the business has to keep the doors open? Things like rent, telephones, and any other general fixed costs that the business may have. Now, this is going to differ from business to business and sector to sector, but whether you are in an administrative type business or a manufacturing business or sales, etc., what I want to deal with here is what are the financial risks that your business, in the event of your death or incapacity, faces? And I'm talking medical incapacity here as well, not just your death. As much as your staff love you and your suppliers love you, they do need to get paid. And if the cash is no longer there, they're going to stop the services and your staff will leave. Are there any commitments to the bank? Things like overdraft, sureties, bank guarantees, business loans. Do you know that the bank actually have the right to call up a loan if a shareholder or a guarantor of a loan actually passes away? The bank's risk profile changes when one of the individuals is not there. And it doesn't mean that they're automatically going to go and call up the loan. But what does happen in reality is they actually reassess that risk. It's almost like taking out a full new application. Are there any key staff members that if that person had to suddenly pass away or become medically incapacitated, what would the negative effects on the cash flow in the business be? How do you ensure that that cash flow is protected? It is something to think about that, there may be a really tight relationship between a key client and that staff member. And if that person's no longer there, you could lose the client and hence lose the cash flow. And then most importantly, how do you ensure the business as a business owner to make sure that you protect that income? And how do you, as a business owner, make sure that your family are protected? How do your family continue to receive an income and to get paid out the full value of the shareholding that you hold in the business? It sounds like a silly question, but in reality, if your business is worth £1 million, how is your family going to realize that value? Just to use a case study here, I've got an example of Joe and Jane owning a business, limited company with equal shareholding. The business has been running for a number of years now and has been quite successful, and they have 10 staff members. So there's obviously an obligation to those staff members. They own the premises that they're in, and they have a mortgage over that property of £650,000. They have an overdraft at the bank of £100,000, and for cash flow, that's for cash flow reasons basically, and is regularly used. The business has a value of £2 million, meaning that they each have a shareholding of £1 million in the company. And Jane is responsible for the majority of the income coming into that business, and she has all the relationships with the clients. In scenario one, if Joe passes away or becomes mentally or physically unable to continue working, the bank would call an urgent meeting with Jane to reassess the bank's risk, remembering that the risk from their point of view has now suddenly changed. So they will need to clarify and understand clearly exactly what that risk is on the £100,000 overdraft, as well as the mortgage of 650,000. Obviously, on the mortgage, they've got the property as surety, so they do have that security in it, but they do reassess the loan. Furthermore, Joe's estate has the business valued, and they're looking for the settlement of that £1 million that is owed to the estate. Essentially, is Joe's wife now going to inherit his share and now become a shareholder or director in the business? What is the negative effect on the business as a result of Joe's death? Is income at risk? How long will it take to find someone to replace him in the business? No one's indispensable, but there's an amount of time that's going to take place where there's going to be a void in the business. And then really importantly, if Joe passes away, can we keep the doors open? So part of your financial risk analysis as scenario one is to look at that. And then secondly, if Jane passes away, going back to what I said about Jane earlier being the key person for the income in the business, the bank, again, call up an urgent meeting to assess the overdraft and the mortgage. Jane's estate has the business valued, etc., around that £1 million. Is her husband now or partner going to become a shareholder in the business? What is the negative effect on the business on Jane's death? Is income at risk? Absolutely, income's at risk. How do you address that? How long will it take to find someone to replace Jane? Could be slightly longer than Joe, depending on the role that Joe played, etc. Can we keep the doors open? So there's lots of questions to be asked there. And the reality is that most business owners have not addressed this and do not have a succession plan in place. The solutions are to what I've just mentioned is a shareholders agreement first and foremost. I actually came across a client last week where we had been dealing with him for 3 or 4 months, and he said to me, I need to have a chat with you because we don't have a shareholders agreement. It's basically on a handshake. We've got a limited company, but it's on a handshake. You've got to have it in writing if one of you passes away. Secondly, the shareholder protection. You have a shareholder protection policy for £1 million each for both Joe and Jane, including a cross-option agreement, which is a legal document that enforces the sum assured to be paid to the estate. Without that cross-option agreement, and if you do have an existing shareholder protection policy in place, if you do not have a cross-option agreement, that policy means absolutely nothing. It's just a policy that will pay out to the surviving partner. Then you've got a key person insurance policy. Sorry, I lost my train of thought there. You have a key person insurance policy to cover the potential loss of income. There's a mortgage protection policy which will cover the mortgage if either Jane or Joe passed away, that the mortgage would be settled exactly as you do in your personal capacity. And then there's the £100,000 overdraft where there's a contingent liability that would cover that loan as well. So basically, if the bank called an urgent meeting and those were in place, their risk would be completely, their risk would be satisfied. By simply doing this, you just immediately reduce the risk on the business and allow the business to continue. So the key is for you to identify the risks within your business. Well, essentially what we do is a financial risk analysis to pinpoint exactly what those risks are. Pretty much what I did there with Jane and Joe. Sorry. One of the most important things for you to do there is this financial risk analysis. Once that financial risk analysis has been established and you're able to see what the effects on the business will be and look at potential ways to reduce that risk, rather know what they are than do nothing about it. And that's one of the most difficult questions, or where one of the most difficult questions comes in, where it's, will your business survive if you don't? And I think that's a key question that every business owner and entrepreneur needs to ask themselves. Insurance as a solution, absolutely it's a solution. The role of insurance reduces financial risk. Yes, it comes at a cost, there's a premium, but we'll address that a bit further on. Insurance policies structured correctly, and I emphasize on that word structured correctly, and I will cover it now, reduces and totally eradicates the financial risks that your business could face if you or a key person in your business had to pass away. Coming to that structured correctly, if any policy is not structured correctly, there could be huge tax implications on the shareholders and the business, and I'll elaborate on that in a bit more detail now. The different types of policies that you get, one of them being a shareholder protection policy, which basically ensures that the true value of the shares owned by each partner is paid out to the estate or to the family without negatively affecting the cash flow of the business, as well as ensuring that the control of the business stays within the existing partners. And then key person protection. This is the company-owned policy that ensures that the cash flow in the company is protected from any potential loss of income that the company could face if the key person had to pass away. And then contingent liability protection, which covers the bank loans. It protects any loans that you could have, including a shareholder's loan. It's not just the bank loans, because remember, an executor of an estate is going to be looking for the shareholder value as well as any loan accounts that the individual may have in the business. And that'll need to be settled by the company or by the shareholders. There are a list of others, but those are probably the most important ones that we need to address for what we're doing here. If a shareholder protection policy is used in the company as general cash flow, it will be treated as income in the business, and there'll be an increase in turnover, and there'll be an increase in corporations tax. In addition to that, there's a 20% tax on that policy because it doesn't go to an individual. If a shareholder protection policy is not held in trust, then there's the potential for the proceeds of that to be included in the individual's estate, which pushes up the inheritance tax. We'll get to inheritance tax and estate planning a bit later on. If a cross-option agreement is not used in conjunction with a shareholder protection policy, then there's absolutely no obligation for that receiving shareholder to receive that money, to pay that money across to the estate of the shareholder who has passed away. If a key person policy is used to buy the shares of the shareholder who has passed away, there's a severe tax implication. Again, a 20% tax implication on that. So any business protection policy needs to be reviewed at least once a year. A business being as dynamic as it is, it changes all the time. The value of the business increases or decreases. The business loan with the banks increase and decrease, same as loan accounts do. Key staff change. So it is something that you really do need to do. And quite often when I'm chatting to business owners about what they have in place, I get the following response. I'm okay, thanks. I've got cover in place. We put in place 5 or 10 years ago. When you review that, 90% of the time, those policies are irrelevant, as they do not cover the financial risk that the company has, or they're structured incorrectly. I've had many cases where key staff have actually left the company years ago, and the company's still paying that same policy, which is obviously then irrelevant. So in conclusion here, what I want to do is just, let me give you a quick summary. I mean, I left my last corporate job at the age of 31, and I started Edgemont in 1993. Gives away my age, but that's another story. I think being a business owner and entrepreneur myself, it's helped me to understand what you as business owners are going through, what you're faced with on a day-to-day basis, and the stresses and strains. As I mentioned earlier, we focus on the income of the business because let's face it, without the income, we don't have a business. What we've spoken about here is not sexy. You don't pick up your bank account at the end of every month and smile when you see your debit order running, or for your direct debit for your insurance policy. It's a bit of a grudge purchase, but it is such an essential part of what we need in our business planning. It's vital to ensuring the continuation of that business should any of a variation of circumstances happen, and the protection of your legacy as well. So if you pass away, that your family will realize the full value of the shareholding that you hold. To most of us, our businesses are our pension. And if you pass away unexpectedly before retirement, what will your family do to maintain the standard of living that they're enjoying now that you're providing for them? What we haven't discussed in too much here, but I will touch on it very quickly, is the need for wills, trusts, and potential inheritance tax planning. As business owners, you need to have a will. Well, let me rephrase that. Everybody needs to have a will, but more importantly, as business owners, you need to, because you need to provide a channel for the ownership of your shares. Whether you've got the shareholder protection policies in place, that's fine. If you don't, what happens to the shares within the business? Who is benefiting from? Who are the beneficiaries from your will? And irrespective of who you are, it's with or without any assets in your estate. You need to ensure that whatever you own gets distributed accordingly. The other thing to take into consideration as a business owner here as well is the need for business lasting power of attorneys. If you have business partners, and even if you don't have business partners, if you're a sole proprietor, you need to plan that if something happens to you, who's there? And I'm sorry, let me rephrase that. You haven't passed away, but you're unable to make decisions for the business. You need to pass that control over to somebody that you trust. To get that after something has happened to you is an absolute nightmare. It costs a fortune because you've got to go to court, and it can take 6 months to do. So a business lasting power of attorney is a vital tool for you to have as business owners as well. What I've done is I've put a few questions here which I will ask and I will answer. And then if there's any questions that you've got, please just put your hand up or unmute yourself and ask the question. So just to fire off a couple of them quickly, what is the cost of a policy? Actually, the cost of the policies are a hell of a lot less than what you think. The life insurance side of it is really low, and it is definitely worth having a look at. Certainly, when you look at what benefit the cost of that insurance policy provides, it's certainly worthwhile having a look into. Another question that I get is what medicals will be done by the insurer. Obviously, the insurance company need to understand what the risk is. If they're giving you £1 million worth of life cover to cover your shareholding, they need to understand, do you have any pre-existing conditions, etc., etc. They do an assessment and they make a decision from there. If you have a medical, sorry, let me rephrase that. I have a medical condition, can I still get cover? Yes, absolutely you can. One of a few things will happen. They can either load the premium, so they accept the risk, including the pre-existing condition. They just load the premium by 25 or 50 or 100%, and they still take on the risk. Or they could exclude that condition, whether it be asthma or breast cancer or whatever the case may be. They may exclude it from the cover. Is there inheritance tax on the value of my business? It depends. It's a bit of a loaded question. Inheritance tax comes back to, does my nil rate band, is there a tax-free portion on my business? And as long as you've got a trading company, which looking at yourselves as part of the association, your businesses would qualify. But not every business does. So businesses that are buy-to-let companies, basically that hold 5 or 10 or 20 investment properties, that will not qualify. We have more than 2 shareholders. Can we still have a shareholder protection policy? Yes, absolutely. Basically, in a shareholder protection policy, the shareholders are the owners, the payers, and the beneficiary of the policy, and the life assured is the other partner or shareholder. Who pays the premium on the shareholder protection policy? The shareholders who are taking out the policy, they pay that premium. It can be paid by the company, as long as the accountant does a benefit in kind and actually reverses that back out in the accounting process. Who pays the premium on a key person policy? It would be the company that pays the premium, because the company is the owner, the payer, and the beneficiary of the proceeds of that policy. Why does the bank have the right to recall a loan? I think we've sort of covered that. It's to reassess their risk. The risk changes when you've got 2 or 3 or 4 partners in the business. The risk changes, so they just need to clearly understand. Doesn't mean that they're automatically going to recall the loan, but they do have the right to. And if you don't have a shareholder protection policy in place, what happens to the shares held by the person who has passed away? And the reality of that is that it gets left to the beneficiaries through the will, and that person's partner, spouse would then become a shareholder and a director of the company together with the existing shareholders. So having said all of that, I think I've done pretty much all that I need to do on the presentation. If I can work out how to unshare or stop sharing, there we go. And then we can take some questions from anybody else that's there. Any questions from anyone? You can just unmute yourselves and fire away. What I will add while you are doing that, Caitlin's going to add some things into the chat, which is basically a few brochures for you to have a look at.
Great. Hi there. Thank you very much. This is really helpful.
Good.
I'm just wondering, is there a recording available afterwards, please? Would it be sent to us or?
Hi. Yeah, I can answer that one if you want, because there is a recording of the whole session. So the whole session is being recorded, and it will all be put onto TTA's YouTube channel afterwards. So you will be able to watch this back afterwards if you like. And a big thank you to Andrew, obviously Pinto, for the thorough investigation of all the different aspects of what we should consider. But if you feel like you've missed something, or if you're watching this after the event and you feel like you've missed something, you can obviously go back to the recording on the TTA's YouTube channel and cover if anything, and sort of pause, replay, and review anything. I'm sure if you've got specific further queries, Andrew, there's contact details in the chat that you can put in for how people can get hold of you.
We'll drop it in there now, but absolutely, John. I think if anybody's got any questions, please feel free to get hold of myself on email or send me a WhatsApp. Very happy to have a one-on-one chat with you, because everybody's situation is different, and the advice for one person will be different as compared to somebody else. So very happy to look at that. I'm just going to put my email address in the. I better spell it right, yeah.
Yeah, definitely spell it right, please.
Oh. I think that is right. There we go.
Thank you, Caitlin, as well.
Thank you.
Pleasure. Thank you very much. Thanks, John. I really appreciate this, and hopefully we can be of some use going forward.
No, and we really appreciate the opportunity to be able to get members to consider this kind of topic, because obviously it's not something which comes up on our most common queries, but obviously it applies to everybody, right? Everyone's not going to be around at some point, and you've got a lot of the people that run tuition businesses, including some very successful tuition businesses, whether it's they're operating on their own or as a large company. They will obviously need to consider what happens when they're no longer here and things like that. We've got another question from Lisa. Lisa says she's a sole trader. Would my insurance be a key person policy? I don't know if this is something you want to sort of query. I know there's going to be a lot of caveats here, Andrew. I can imagine.
Yeah, there are.
Address that.
Absolutely. I mean, as a sole trader, I think what you've got to have a look at, Lisa, is what happens to the business if you had to pass away, because you are effectively the key person. So the answer is yes, you can have that. What you do within your will, you leave the shareholding, or it's part of your general estate, gets left to whoever you've left as a beneficiary. That person, that individual, or a trust, if you leave it to a trust, would become the owner of the business, and the proceeds of the policy get paid to that individual. A more correctly structured, especially around a sole trader, would probably be a different type of insurance, where what you're looking to do is firstly answer questions like, do you have staff within the business? If it's just literally you and no staff, it's a different discussion to have to somebody who's got some staff members that need to be looked after. So absolutely, a key person policy would work as a sole trader, but there would be other options as well.
Lisa, did you want any clarification on that? Is that enough? Did that answer the whole question? Yeah. Okay.
Perfect. Any other questions for Andrew while we've got him here? I mean, I know for one, I'm going to get back in touch with Andrew and ask some questions specifically about my situation, because I think we all need to. This is something we all want to consider, really. And yeah, absolutely.
You're not going to live forever. We should all be realistic about that, and obviously making sure that if we've spent all this time, sweat, and energy to try and build businesses and to try and be successful as far as we can, then it would be a very real shame if it all fell apart catastrophically when we weren't here, or because we were incapacitated for some reason. And it can happen. It was never going to happen at a time of your. It's not always happens at a convenient point, right? It's not like you go.
Absolutely, John.
And the bad things are going to happen.
If you look at insurance like you look at general insurance on your motor car, you don't need insurance until you need it. So, you're fit and healthy. The last thing you're thinking about is passing away. But it's exactly the same as when you get into your car and you drive your car to the shop, that somebody can smash into you. and you need to be covered for that. It's exactly the same analogy.
Brilliant. Well, if there's no other questions, I'd just like to say a really big thank you, Andrew, to you and your team.
Appreciate
Absolutely. We're really, really pleased to be working with you to be able to offer this kind of information and to work with you to support people in putting in place appropriate provision for this kind of thing where in the future, given especially that tutors are in a position where they would need to consider this. They wouldn't have necessarily a big company's generous scheme to fall back on. And
Sure.
and we really appreciate your energy and your efforts to explain that in detail a lot of the different considerations that will all apply to somebody out there in the tuition sector. I mean, many of them will apply to a large part of the tuition sector themselves. So yeah, thanks very much for your time. Thank you very much to your colleagues as well. And we look forward to obviously to working with you in future. If you do have any questions and you're watching the recording, please do go to Edgemont Financial Services or edgemontfs.co.uk or contact Andrew at edgemontfs.co.uk and find out what it is that you might need and how they might be able to support you with this. Thanks so much, Andrew. Really appreciate your time.
Thank you. Bye-bye, everyone.